All right, everybody. I'd like to welcome you to the third Team Plan the Trade, Trade the Plan live Q&A here. Got a few questions that came in already, so we're going to start with those. So let's start with the MACD. So basically, the MACD is a really powerful and simple trend. The reason it's so powerful is because what it's using is two different moving averages, and it's using those to calculate momentum. So it offers a trend and momentum. So basically, by using the 12-day simple moving average and the 26-day moving average, the MACD, by simply looking at this MACD line here, you can gauge all the calculations that indicator is telling you. So what happens is the MACD, I can zoom in here. So the MACD has this zero line right here, okay? And what happens is, when this MACD line crosses below the zero line, hold on a second. So with the MACD, basically what you look for is, let me bring this over. So here's your MACD down here, and the red line the red line is the MACD, and what you're looking for is the black line to cross. So here's a chart of AMRS, and you can see this was trying to give us a warning here. The MACD crossed right here. You see where the price was, it was still at $1.06. So when this MACD crossed, what it's telling you is, you can see it, same thing here. The MACD crosses here. That means the 26-day moving average and the 12-day moving average intersected. The 12 goes down through the 26. That's where you get this MACD cross. Look what happens to the price. It tanks. Okay. So the MACD is really powerful, and that's really what you want to look for, is when it crosses up through or down. You can see here. Okay, you can see here the 26-day moving average gets intersected by the 12-day crossing up. So now you have a MACD cross here. And you can see the MACD crosses, the price is right here. So that is super bullish when it crosses. You can get in and look at that price action. Same thing here. 12-day simple moving average crosses down through the 26. So you can see the MACD going down. So here it is again. You can see the MACD is crossing here. IBM as an example. So that's a sell signal right away. MACD is crossing. Price is still hanging up here good. MACD crosses down through, you get out, price action falls. Now you can see how low the MACD line comes. Crosses back up through. You can see where it crossed through is right here. Look what happens next. MACD line continues to go up, and look at the price. Takes off. It does cross down here, and you had a slight little, drop in price action. Kind of goes sideways, crosses back up again. So no indicator is exactly perfect. But the MACD is very powerful when you get the center line crossover. Okay, here's the chart of AMRS again. And that's just a perfect example. You can see MACD had crossed back here, giving you the buy signal, very bullish. You get very nice price action. But crosses down here, that's instantly telling you that's bearish and to get out while the price is still up here. Crosses, and now look how far down it goes. Basically, when the MACD goes under 0, it's extremely bearish. You can see down back here it was way down under 0. And until it gets over 0, right here, is when it starts to become bullish. MACD histogram is also very similar to this and can be used in pretty much the same fashion. Okay, so really with the MACD you're just looking for crossovers, as you can see on the AMRS chart. But now let's switch gears here and go into something that I just live and die by when I trade. Support and resistance. You guys hear me say this all the time. Support and resistance. Especially with day trading. Okay? Support and resistance is what allows me to plan every trade that I make. Okay, so support and resistance, it's basically forces of supply and demand. So support is the price level at which demand is thought to be strong enough to prevent the price from declining further. So here's a chart of Amazon, and you can see it's coming down, it stops and comes back up. Same thing here. It never really breaks this level of 60 bucks. Multiple times, 1, 2, 3 times, it hits it, another time, 4 times, and it bounces off. So that's support. You can see what it says. Support does not always hold. And the break below support signals that the bears have actually taken over control from the bulls. Which often leads to lower prices. So now resistance is the same thing. It's the price level at which selling is thought to be strong enough to prevent the price from rising further. Okay, so that's why on day trades, that's the first thing I look for. If a stock is moving and the stock is up 20%, 30%, somebody's mentioned it in chat, the first thing I do is pull up the chart 1 month, 2 months, 3 months, 6 months, and look for this resistance. And it's really easy to find. You see how quick and easy it is to spot out these supports and this resistance. It's basically just the point that the price struggled to get above multiple times. You know, Eli Lilly, 1, 2, 3, 4 times it tried to hit 75 and just could not break through. Broke through here for a second, but could not stay above it. Well, so with support and resistance, you look back as far as you have to. Sometimes I've got to look at 1 year to 5 years just to see where that resistance is, because sometimes you have no resistance there. Right? So with Eli Lilly, if this was to break 69 bucks right here, I look for the next resistance, it's up at 75. So if this was to break 69, which is a mini resistance right here, it should get to 75. And that's why you have big breakouts. When these resistance levels break, your price target becomes the next higher resistance. So anything that's moving, say it's up 10%, 20%, 50%, 100%, instead of just chasing and jumping in and buying because something's going up, that's not a reason to buy. The first thing you want to do is pull up the chart, check support. So check the level where the price action seems to be bouncing off of 1, 2, 3, 4 times. It really has not closed below that price. Okay, so you know where the support is. It's a good area to buy. And then you check the resistance. So same thing here, right? Looking at this chart, you can see the resistance clearly at 42.50. So if this price was to come up here and break 42.50, how do I find the next price target for a swing trade? It's way up here at the next resistance, 49.50 bucks. So a break of 42.43 and a close above it. When these resistance levels are broken and then closed above, this red resistance line will now turn into a support line. And the same thing happens with support. If this price was to come down and fall underneath 33, this 33 level would now become resistance. And it's going to struggle to get back up above it. Okay? So, basically, what I highly recommend to all traders, regardless of your skill level, okay, beginner, advanced, 50-year trader, is stockcharts.com chart school. For the first year of my trading, I was on this site almost 24/7. Okay, so chart school, when you go here, this has everything categorized. It's got chart analysis, overview, indicators and overlays. Okay, trading strategies. And basically what I recommend is just coming in here and looking at all the different types of charts. You can look at every single type of chart pattern that there is. And it's very, very useful. So I recommend checking that out. It takes a lot of time reading, but you will learn a lot just looking at different chart patterns. And so with gaps, let me bring this up here. All charts do follow a pattern. They give a pattern, and you try to recognize that pattern and use that chart to predict what we think will happen in the future. No one knows what a stock will actually do, but we can use the chart pattern that stock has made in the past to try and predict the future. So with gaps, this here was my mentor low trade, taught me so much about what I know. Okay, so why do gaps need to be filled? They don't need to fill, they usually do. So you got to think about what causes the gaps in the price. It's emotion. Whatever causes that gap, whether it's a news, it's big money manipulation, huge price swings, it leaves gaps in the candle patterns from the previous day's close to the next morning's open. So we got 4 types of gaps. We've got common gaps, breakaway gaps, runaway gaps, exhaustion gaps. Now some people might get confused about actually what a gap is. We never know if it's going to gap up or down, okay? Exactly. So if there is a gap up, you look for certain things. Same thing with a gap down. You look for certain things. So what causes the gap is just emotion, one way or another, good or bad. So if a stock price closes at 50 and the next morning it opens up lower, that's going to be a gap down. And same thing with if it opens up higher than 50, it's a gap up. Okay. So 90% of all gaps will fill eventually. Some people might say lower, but it's 90%. So common gaps are always closed. They usually occur one day, and then with the second day lack of continuation, it'll drop and fill. Breakaway gaps, those are the ones that are usually closed over time. So, you can see down here on this chart, the breakaway gap kind of just happens during a run. And eventually after, a month, it depends, trending, channeling, it'll drop down and fill. The runaway gap, those are the ones that don't fill because that's, or if they do fill, it takes a long time to fill. So you can see runaway gaps are like what we're seeing in, OPXA, MEMP. You get a big drop in price and it's going to, consolidate, eventually takes a couple months, and it ends up filling way up here 3 months later. Exhaustion gaps, those are the ones that really don't come too much. It's kind of like at the end of a run. So I think, did that happen at AMRS? Not really, no. You had a slight gap here. This top candle is actually a exhaustion candle. Came down and filled the gap. Had a little bit more jump, but that's not quite the exact same. Oh, whoops. So gaps are really good because basically if you have a gap down, let's see if we can look at OPXA here. So at OPXA, you have a big gap down. Price was 330. Next day it opens up at 125. So if this was pre-market and we're seeing this, basically what we're looking for is a break of 125. And it kind of did do that, and you see it went up to almost 150. But what happens is as soon as it comes down below that 125 gap down open price, whatever it opened at, it can usually go lower. And you can see the low on the day of the gap down day was $1. So the next day, as soon as the dollar is broken, it keeps going lower. The reason why I like this OPXA now is it's trying to bottom now. 3 days in a row it's kind of held. 2 days ago it kind of did dip down, but now it's starting to come back up. And you can see the MACD, what we talked about earlier, this thing is way down low. So when this MACD line is way down negative like this, really it's trying to tell you that the price action, it's going to come back up. When you look at AMRS, you see how high it was. With this MACD line way up here at 0.15, it really can't just keep going up. That's why this thing has so much room to come down if it wanted to. Alright, so let's see, what do I got next here? So let me just let me go into the scanner that I use here. If I'm trying to find stocks that I want to buy, I go to finviz.com. You click on screener. Okay. And basically what this is you can come in and select whatever it is you're looking for. So for me, I do not like stocks that trade under really 1,000,000 shares. I will look at stocks if they trade, 200,000 to 500,000 for swings. What happens is if the stock is trading less than 1,000,000 shares, it's going to trade really slow intraday. It's not good for day trading most times. The action's real slow. It's not that liquid, so when it comes to getting in and out, you might have to wait, that type of stuff. So by looking at stocks over 1,000,000, you get good action. So I kind of got a couple of presets here that I use. Let's look at this one here. Computer's a little slow, but so with this screen here, what we're looking at is stocks priced between $1 and $10. The RSI over 50. The reason why I like RSI over 50 is because that's generally telling you it's going in the right direction. You got strong buys coming in. Okay, and you can see I have the price set under $10. 1 to 10 on this one. Volume over 500K, and then it scans, and you just take a look at it. I got it set from high to low. And you just go through and check out the chart like this right here, OPK. Just from looking at it, after 2 seconds of looking at that, I like this chart, OPK. Okay, you can see made a very nice run starting in September, took off from $9 to 11, and now it's dropped down, made a higher low between October and November. Okay, and now it's starting to bottom and starting to come up. So we're gonna watch for on this OPK. This is a good one to watch. Keep on a watch list. 978. It closed high on day. Okay. So at OPK, going in tomorrow, it breaks 978. Price target's $10. And why is $10 so important? Because if you break $10, you notice there's a gap. We just talked about gap. Exactly. Fill that gap up. That gap up goes to about 1040. So knowing if OPK can break $10, that is resistance and also a gap. So that makes it very strong. So this breaks $10. I mean, it is going to go to minimum 1040, 1050 target. And what happens is it breaks 1050, you go to the next resistance. Where's the next resistance? You see that little green candle there that spiked up. It's just under $11. Break that $11. Now you go to the top of that run. More like 1130, 1140. So that's a nice one. Same thing with this one here, OMER. Had a nice day Friday, up 7% on 400, almost 1,000,000 shares. So high on day, looks like it was about $10. Break $10. Where's the resistance? You can quickly see just around $11, just under $11 used to be support. When you see that $11 break right there at the beginning of October, you see what happens? Huge drop. So about $10.90, $11 would be the target here if this can break $10. This one's okay, not really in love with it. Had a nice downtrend, now it's kind of just consolidating sideways. Yes, OPK is very nice. And I think that this one is actually on our watch list for tomorrow, CFMS. And the reason I put it on the watch list, if I can pull it up, and there it is, CFMS. Okay, and let's actually take a look and see what I wrote about it. So CMFS, here's the chart. It's not going to let me pull up both of them, of course, but sorry about that. All right, finally we have the chart that I'm trying to pull up. So you see in the watch list what I put. Nice day Friday, up 33% with volume. Watch it for continuation as it closed above the 50-day moving average, which is 883. You can see right here the blue line. Okay, and the 200-day moving average at 896. Now that's the only reason I like this one. Had a nice trend, you know, this whole time. Higher lows, higher low, higher low, higher low. Crosses the moving average, very bullish. Stays above that moving average. So had a nice trend. And it breaks this moving average here. Look what happened. You know, actually the MACD, we talked about this earlier. MACD actually warned us. Before the price action fell, you had this cross right here. Scroll up and look at the chart. Price action still at 10 bucks. So the MACD is very powerful. You got the 12-day moving average and the 26-day moving average working for you behind the scenes. Just using this one simple little two lines here. MACD. Crosses, sell. Look what happens. Boom. You get another $3 drop in price. So, but anyways, the reason I like this chart, as soon as I look at it, RSI is over 50. So that's in the bullish zone. MACD, look at this MACD, was down, boom, sharp turn up. So whenever you hear me say the MACD is about to cross or the MACD crossed, what that means is this black MACD line is crossing this red, the red convergence line. And when you get across, you get strong moves. You know, if it crosses down, you get down action. If it crosses up, you get nice up action. So, see what it says, MACD will cross if it goes again green on Monday. So basically what we're watching for is high on day on Friday was 958. So if this price action said, you know, might go red to green or something like that, might come test that 896 or this 883 moving average, which should act as support now moving forward. But what we're looking for is if this can break 950, you can see it was kind of resistance right here. Break high on day from Friday, 958. Price target is at minimum $10. Can come all the way up here to over 1050, 1075. Yeah, basically RSI, MACD, and moving averages. That's all I'm looking at really quick. I mean, these are my go-to indicators. You know, when I'm quickly trying to make these watch lists, you know, I'm looking at my FinViz scans. That's really all it takes. Is one look at the chart. Let's see what else we got here. That's not good, not good. Had a big gap up here. We can see the price actions all over the place. Not in love with that one. This one's okay too. Big resistance at 850. You can see it back at right after September. Couldn't break 850. Touched it again at the end of September. Couldn't break it. Broke it a little bit, but still couldn't close above 850. So RSI is the relative strength index. And that relative strength index is a very powerful tool. Okay. And I'll give you an example. We're going to look at once, it's an OTC stock that I held overnight. Okay, here's your RSI up here at the top. So currently the RSI is 50. So what happens is 56. Okay, let's look starting here. RSI, basically when the RSI is between 30 and 50, it's basically a sell signal. That's hard to say. Under 30, the stock is oversold. Over 70, the stock is overbought. Okay, I mean these are like the go-to indicators I use: RSI, MACD, and moving averages. That's really all you need. Support and resistance. Again, everything goes back to support and resistance. You can see just looking at MJNA here's OTC stock follows the same principles. Right here, resistance, 5 cents. Okay, right away I know this is resistance because it got up to it and it couldn't break it. Came all the way down. Now look what happens. Okay, right around here, this should have been on watch for a 5-cent break. Touched it right here, couldn't break it. But what happens here? Look, breaks it, takes off to 8. Sure, comes back down, slightly breaks it, but it turns into support. You see support again here. And then what happens? It takes off. So now knowing 8 cents right here, couldn't break it, that's going to be resistance. Look what happens. Same thing. It breaks that 8-cent mark. Acts as support now because it closed above 8 cents. It takes off. So RSI, and you can see when the RSI is over 70, it's overbought. So this thing was up at 90 right here. Okay, that's kind of telling you anytime the thing's over 70, that's when you get your true power moves. But at the same time, you can get a very big dip. And you can see what happened here. This thing took off all the way up to 26. And actually, you take a look at when I sold this thing, it was either dumb luck or, you know, I'm using these indicators. You can see I bought right here at 19 cents on this resistance break. Had a resistance at 18 cents, right about here. Breaks it, okay. I see that it hold above 18, and I bought 7,000 shares, 19 cents. It consolidates, goes sideways. Here's a little flag. 19 as support, 20 as 20 as resistance, and just rips. And what happens? Look, what high on day was 26.8. What do you know? I sold 7,000 shares at 26, a little bit more at 27. Quick, easy trade. Resistance break over the top VWAP or top Bollinger Band, definitely a sell signal. So that's just a quick example there. But RSI, it's just a real. These indicators are meant to be quick quick things to help you out, to make it easier, really quick. You know, you can see MACD crossed way back here, crossed black line, crosses up through the red line. Okay, and that right here is right about here. So it's giving you a hint before the price even takes off. That 12-day and 26-day moving averages just crossed, and that's why the MACD crossed right in here. Look at that move. And this MACD, you know, and so now this MACD's way up high at 03. So this price can really collapse. I mean, I did overnight hold this, but basically, only reason I liked it was because 10 kind of acted as support. I'm looking for a quick pop to like 15 cents at the open tomorrow, and I'm out. So RSI is 56. Usually you get bounces off of 50. Once the price action RSI can break 50, you can see here, tried to come down to 50, bounced again. Same thing, down to 50, bounces again. So yes, that is correct. So the MACD and RSI can be used. What did I do? Sorry about that, guys. Computer screen just locked on me. But yes, the RSI can be used on 1 minute, 5 minute, 30-minute charts intraday, but it's not as effective in my opinion. The RSI and the MACD are best used on a daily time frame, because that's giving you the overall picture of the trend. These are all technical analysis to help us with identifying trends, but I hope that, you know, see if I can get a better example. So here is OPXA. Really just, you can see the RSI broke below 50 here, kind of gave us a warning. It also crossed below the 50-day moving average, very bearish. Okay, MACD crosses down through the line, and that's right about here, giving you a warning well before this humongous drop. You know, so you look at these indicators, they're trying to help you. AMRS, it crossed days before the big drop. Same thing here. MACD crosses, and the reason it crosses before the price action falls is because this price action had come down. So your 12-day moving average and your 26-day moving average, which is working behind the scenes here in this two little MACD lines, is telling you, hey, something's going on. Price action's turning bearish. RSI, see the big drop, huge decline. Breakthrough 30, extremely oversold. But I do like this OPXA. You know, RSI is way down at 13, extremely, extremely oversold. Can the price go lower? Sure, it can go lower. You know, I've seen RSIs, I think, at 7. I mean, we got a question about ARIA. We'll pull that up in a second. Let's see what's going on with that. There's a small possibility that GEVO, G-E-V-O, can pop soon. I'm seeing something in the chart that might be starting to develop. So yes, I do have area right here on Swing Trade Setup Watch. Okay, and the reason I'm liking this is, okay, here's a chart of area. Decent trend, you know, big rip breakout. You know, was down here at $7 back in mid-July. Broke out through the 50-day moving average. Here's one of those gaps. This is actually called a runaway gap. This runaway gap, you see how long it took to get filled. Price action just runs. Price action runs away from that gap. That's a strong move. Okay, comes way up here. Notice the RSI. RSI way up at 90. Very overbought levels up here, playing strictly on momentum. Okay, RSI crosses down below 70. That's kind of, same thing. MACD trying to give you warning here at the start of October, and that's well before this big decline. You see the MACD crosses right here on October 5th. Look at the price action. It's still up here at 1350. Sure, it goes up to 14. Gives you a little sympathy pop, but still, the MACD predicted this drop like a week before. And you see what happens once it crosses down this MACD. It just never gets back through the red line. It actually separates. Bearish divergence, that's called, when the MACD line can separate further away from that red line. Very bearish. But anyways, I like this as a swing trade setup. And the reason is, it made a nice move. Now you see it's come down. You got a gap right here. 1050 to 10. The reason I'm kind of watching it is because it's got not only the 200-day moving average here at 832, but you have nice support. Okay, nice support. About 850, 855. See low on day Friday, 867. So this is consolidating. It's tried to push higher. Over here. Came back down. Same thing now. It's trying to push higher again. So I'm just watching it. I like to watch my swing trades for at least 1 to 2 weeks before I get in, just to gauge the price action, gauge those support and resistance levels really well. But basically, if ARIA can get back above $9, start closing above 9. Okay, I can see right away small resistance here, 925. But basically, if this can break 950, now you're battling this. That's right, RSI and MACD. Support and resistance. That's what I live and die by. Especially for day trades. Support, resistance, RSI, MACD. Those are the top 4 or 5 in volume. Those are the top 4 or 5 things I'm looking at. Break 950 gets up into the gap zone. So this might go sideways for a couple months more. I don't know. But the RSI did break above 30 now, so it's coming out of oversold levels. We want this RSI to get back up to 50. We'll probably, basically the price will probably come up here, 950, go sideways, fill this gap. This RSI will break 50, and then that's when you'll fill this gap and get up back to $11. Okay, so let's see. Maybe we can go over some of these other ones that I just put on the watch list. I got Kara on there. Why do I like Kara? Found it in my little FinViz scan. Not in love with it, but, made a very nice move on Friday. Okay, you can see, nice, decent trend. Higher low, breakout. Okay, and it's come down some. Actually broke below both moving averages, the 50-day moving average and the 200-day moving average. But found good support here at $6, and you can see the massive volume increase. Same thing. Let's just look at the MACD again real quick. On October 10th, MACD crossed. The black line crosses down through the red line. Very, very bearish signal. That thing is trying to help. This MACD is doing calculations behind the scenes of this chart. You got the 12-day moving average and the 26-day moving average right here on October 10th. Those moving averages crossed. Look where it is. The price action's at $9. Okay? $9. That's bearish. Get out. This thing is telling you, hey, the 9-day, the 12-day, and the 26-day moving average is just crossed. That's bearish. Sell. $9. Look what happens to the price. Down under 6 in less than a month. Okay, but now, why do I like it? Look, you can see the MACD tried to bottom. It's starting to come back up. So, also, this could be looked at as a potential swing as well in CARA. Reason I like it, let's see what it said. Nice day on Friday, big volume spike. Okay, we're looking at volume. When the price is moving up in any stock, no matter what, you always want to see the volume increasing. So if this was to continue tomorrow on Monday, you want to see volume stay at least close to what it did here, 2.9 million on Friday, if not increase. You want this volume number to go up. And then, if this thing does 4 million volume tomorrow, it'll go to $8. I mean, I'm almost positive. You want increasing volume with the stock price increasing. Okay. I'm watching it because it closed over the 50-day moving average basically at 717. So could go red to green or something like that after a nice big day of 23% on Friday. Could dip probably to $7 is my guess. That should act as support now. It'll come back up, cross 717. Basically, what we're looking for is a break. I made a typo right here, but basically a break of 750, which should yield the, you can see here, 7 was support, 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 3 times right there. Break 7, excuse me, 750 was the support, break 750. Now that's resistance. And you can see, what a coincidence. What was the high on Friday? 749. Acted as what was support here is now resistance now. So basically, tomorrow we're looking for a break of 749, high on day from Friday. When resistances are broken, you look for the next resistance to become a target. And where's the next resistance? Quickly, you can see it's right here at $8. Price was trying to move up. Briefly broke through 8, couldn't do it. Tried to do it again here, closed red. So $8 would be the price target as well as the next resistance. Say it gets massive volume and it breaks $8. Next target, slight resistance here, but next target would be right up here around just under 9. Now HDP, here's another one. I actually overnight held this one overnight over the weekend as well. And the reason why I held this one overnight, okay, is because $8, you can see $8 right here. 1, 2, 3, 4, 5 times could not break $8. So resistance is $8. You also got the 50-day moving average here at 779. Okay, so it broke through that 779 resistance, simple moving average, and it also broke through $8 resistance. And it looked like a lot of traders were taking note on that and watching for that because you see high on day was 812. Trade's kind of slow. I don't know if it has a big float or whatever, but and you can see all the action here happening with this MACD. I mean, these two little lines, they tell such a big story behind the scenes. Look at all these crosses. So nothing is perfect, okay? But basically, MACD crossed back here September. See, it's not exactly perfect. It crosses here, which is bullish. See what happens? It actually goes down a little bit. And you can see the MACD almost wanted to come and cross back down here. But it's still correct, and it just takes off, and the price takes off. So then you get a MACD cross down here. Still not perfect. No indicator's perfect. They just they try to give us clues to what the future holds. So get a pop, but it ends up being correct and get a huge drop. And the MACD was indecisive here. Crossed up, crossed down. Same thing here. Crosses up, get a nice jump. Crosses down. So and this thing gapped up also. So you want to be careful with this one. Basically, if it closes below 779 again, I'm no longer looking at it. This basically needs to keep closing above $8. If this can close above $8 again tomorrow, my swing trade will stay open. I'm actually doing this as it can swing. I got this open as a swing trade, and the reason is if it keeps closing above $8, where's the target? Next resistance right up here. You can see multiple times could not break this 875. 1, 2, all this right here. Draw a line. So that's the target. Over 850. They can get there. It looks bullish. RSI 54. And also RSI, real quickly, 54. Right away, that's telling you this has plenty of room to run if it wants to. So if volume, look at this nice volume increase. If volume continues to come in, RSI is 54. And another real quick thing you can do with RSI is you go to barchart.com. And I use this all the time as well. And you go to the trader's cheat sheet. And what that trader's cheat sheet does is it actually tells you what the price will be at a certain RSI. This is another really good site. I think they redid the site recently, so and it's looking like it doesn't want to work right now for the situation, but you basically type the symbol in, click on Trader's Cheat Sheet. We'll see if I can get it to work. Slight lag here, but yeah, everything's tweaking out on me. But that's helpful because that'll tell you, okay, this is RSI 54. It'll tell you, hey, at RSI 70, this price will be $9.50. So it gives you good ideas of where the price can go. PTTTP. This is a weird one, but I wanted to put it on there because this has gotten beat up. This chart has gotten beat up badly. Yeah, that great internet service that I pay for, Time Warner Cable. So this thing had a gap down, huge gap down on bad news, I believe. Some failed trial or something. 13 opened at 10, and ever since then has gotten annihilated. Okay, and look at this MACD. What a great darn indicator this thing is. This MACD crossed down on October 15. Look where the price was. 13 plus, over 13. The MACD's crossing here. Before, you can clearly see this line is where the drop happened. The MACD crossed down before that. Giving you warning. And look at that RSI. It went from 70 to 30 in one day. But basically this thing's gotten so beat up. I don't know what they must have had news on Thursday or something. This thing was over 6. It went all the way down to 4. So had a decent day on Friday, and that's why I'm watching it. It went up 19% on 3.5 million volume. Nice volume increase. You can see the MACD's way down low. So that's telling you if this MACD can cross up through the red line, it has a lot of room to go up, meaning the price has a lot of room to go up. But basically we're just looking for a $5 break and then a high on day 526 break. If this can break 526 tomorrow with increasing volume, $6 minimum target, $6 on that one. So we've got a member wants to take a look here at the EBIO chart. This one I've really had high hopes for back a couple months ago. This thing made a huge move, and I actually made a mistake here. I had owned shares of this, a lot of shares of this at $1.21, and I think I sold right here. Right in here I sold like a doofus. And look what happens. The price just rips to $6 in not even 3 months. But anyways, up over 5, this thing was getting big rumors about buyouts and all this kind of stuff. And ever since then, you can see the RSI was over 70, extremely overbought. Ever since then, just has not been able to do anything. Has gone from over 6 down to under $1.50. That is just brutal. But, okay, with that being said, eBio is actually looking pretty decent here, okay? And the reason it's looking decent is you have kind of support here at $1.50. Okay, you can see once here was resistance. So it's kind of support here at 150, even though it broke below it. The reason I like it, look at the MACD, it's way down low. Okay, it is trying to cross up right now. So it's trying to go up. Nice volume increase. You see all this dead volume. You can notice when the price was falling from 6 to 150, no volume whatsoever. You get these random volume pops, and that's where you get the green days. Volume comes in, you see what it does to the stock price. We're going to get into that in a second. But basically, eBio, okay, you're looking for a high on day break from Friday. And when I say continuation, that's all that means. Continuation is simply what it sounds like. For the price to continue, okay, it closed at 168. So knowing if it breaks 168 tomorrow, high on day from Friday, 185. To get continuation, knowing if it breaks 185, where's the price target? Next resistance, big resistance at $2. One, it was support here, kind of support here. That support broke, big drop. So 194 is the 200-day moving average. That is resistance. Also $2 resistance. So this thing, in my guess, is going to need some news, some kind of manipulation. My guess is news comes out this week for this thing, because it looks like it's setting up for a pump, in my opinion. RSI has come out of oversold territory, 33. Basically, I get interested in this if this thing break 194 and start break $2 and close above $2. If it can do that, I become very interested, especially with increasing volume. Okay, because then it's 250 is the target. You break 250, you can see it's resistance here. Was support here, broke. It's resistance now. Break 250, price target goes to $3. So that's a good one to watch. See if there was just any other real quick ones I wanted to look over. INST. Let me just go over that one real quick, and then looks like we're almost at the end of the hour here. But you know, little by little, I hope these Q&As are helping everybody out, and kind of having minor difficulties as far as the speed and the you know, but hopefully they'll get better moving forward, and I get a little more used to this. But INST. Okay, let's see what the watch list says. This one's looking really good. Oh no, I don't even have it on the watch list, but I do have it on Okay, I do have a new key here. Ticker symbols that show up in blue, INST, MEMP, OPXA. Those are ones that I'm strongly watching. Okay, I definitely want to watch those. I'm interested. I'm looking to start a position. I'm highly interested in opening a position. I just want to make sure my analysis and the technical indicators confirm the trend that I'm seeing and possible increase in price coming. So this INST, really quick, it looks really good. It had a big gap down from 25 bucks. This thing went down to 18 bucks like 4 or 5 days ago. Okay, but the price action has held. Closed strong at 19 after the big gap down, way up off of its lows. Okay, and the moving average here, 200-day moving average is 2019. Okay, it closed at 2030. So it closed above the 200-day moving average, which is a good sign. RSI oversold 27. You want this to break 30, come out of the oversold levels. Looks like, okay, massive volume on this gap down day, of course, because you had all the bunch of panic sellers and bottom fishers, bottom buyers coming in. Volume has dropped off very low, and you can see decreasing volume, tight range. Okay, you don't get much action with no volume. MACD's way down low. It's trying to start bottoming to curl back up. But basically, if the price can remain over $20 support and over 2019, I really like this one. Basically, if this can break high on day of 2065, this thing is in the gap fill zone. You got all this gap to fill. So, see really quickly. Okay, so intraday, right? We're looking at runners moving. Okay, look at this here. Let's see if I can get it set up. I'm running out of time yet. Darn it. Yeah, we'll go over that later. But basically, as far as the election, keep that in mind. We do have the election coming up on Tuesday. So, as you can see by this chart here, UVXY, this is a 3 times ETN. Okay, and what this thing did the last 10 days has done nothing but go up. I mean, look at that. You know, I should have been on it. This thing does swing violently. You can see every time it goes up, it comes down. This trades inverse to the market 3 times, so you do get a lot of big swings, but the overall trend has been higher, and that's because the VIX is going up. Fear and uncertainty are going up in the markets. We got the election. We don't know who's going to be president. You know, a lot of stuff going on. So I'm actually going to watch this. I'm actually probably going to start a position in this tomorrow. It does swing violently, like I said. Got to be careful. These are not meant to hold overnight and hold for multiple days, but they are good when it comes to trading the overall trend. But basically, during the day, if something's running, if something's moving, I use the 5-minute chart. It's just not going to show it right now, but yeah, this is 1 day, 1 minute. So, and I put the VWAP on because with the VWAP, that's giving you a good indication of where most people are paying for the stock. Things getting really slow here, guys, but just want to remind everybody to trade safe this week. Volatility will be there for sure. And real quick here, before I wrap it up, see, just want to show you guys some stocks that I will be watching here post-election. Okay, I use my FinViz scanner that we went over before, and I've got a utility company scan here all set up. And the reason I like utility companies, okay, generally when the market goes down, utilities are looked at as kind of a safe haven. You think about it, utility companies are always making money regardless of the economy, regardless. Don't get me wrong, they could go down too. Either way, election or not, the market is extremely overbought. The market is, every stock out there is extremely overpriced and expensive. Most big money people are not pouring their money into the stocks right now. Equities are just too expensive in the market after the biggest 8-bull run in the history of the markets. That stocks need to come down. So, just happens we have an election on Tuesday, but even without the election, stocks still need to come down. So I think the election will cause some volatility. This markets could go up and down. They probably will go down, but once the rate hike comes, I think that's coming in January or February. I think the markets are going to go down about 10 to 20%. And what do I look for? Some of these utility companies. Find one that has a decent trend and put money to work. A lot of these have been beat up. See, they don't really do much. When the market's going up, they kind of stay even or go down. But what happens is when the market goes down, these utilities, they pop off. Money pours into these utility companies, especially when the market goes down. So I'll be watching a lot of these utilities. But of January 1st, and I just want a reminder to our members, we've got 51 spots left of the Platinum limited lifetime access discount, and that will expire December 31st at midnight. And trade safe out there, especially this week with the election. And always remember to plan the trade and trade that plan. Have a great night, everybody. We'll see you next time.